All right. What's going on? Hold on a second. Okay. We got it all set. Okay. So I have to be quick here. I think we're going on Jesse's in like 30 minutes. I I have to respond when I see I love it. I follow these clowns and I can't help myself when they just do stupid shit. And here we go again. And I'm cataloging this because you can't trust any of them to keep this stuff online. Um So here he is again. Oh, we're shorting another company because you failed at shorting Costco. So now we're going to short Tesla because he's such a good stock trader. He's so good, right? He's polished. Look at him. Look at him, people. Like, let's look at this man, right? I mean, I'm just some old bald guy. Look at it. He's got the haircut. He knows how to point. He's got the smile. He's got the beautiful setup. You want to believe that this is the guy that's going to help you invest and make money and fulfill your destiny and retire early, whatever the hell you want to do. He's a joke. He's a complete fraud of a friggin' investor. So he has all the looks. It's intentional. He knows how to look and talk the part, but he's not. And all I can do is just keep showing you time and time again why people like him and Paul are such clowns and terrible. And all their money is in making you believe that they are good at this stuff. So their money goes in investments of like, how they look, their presentation, their production value. That's what they put their money in because it's certainly not making anything on investing. So same thing with Paul. He's got a studio. Kevin's got a studio. They have editors. They do all these things to make you feel that they are professional investors. And time again, I show you, and other people have, they don't know what the hell they're doing, right? They can't show you a unique investment idea outside of like clown stocks. They make videos about Tesla and PayPal and all the popular videos because that's what get views. Have they ever put out a unique investment idea that worked out? Okay. I put out a few that I don't think were talked about. A cabinet company. I'm up like 30% on. Disney's probably, okay, fair enough. Disney's kind of a pretty popular stock, fair enough. But then cybersecurity, I don't think is very talked about. So have they made unique investment theses, not popular topics that have made money? And that's how you should assess these people. Because I was just talking earlier today in one of the discords I'm in. So Ryan Williams knocked an investment out of the park. And we should give people dues for things that they actually, good investment people online. Okay. He bought Williams Sonoma. Ryan Williams bought Williams Sonoma way back when it was like here. So he bought it when it was like 120 or 110, $120. He put it on his channel. I don't think he has individual stock videos. It was just part of his normal video series that he goes live. He put it out there. It's a very unique idea. I don't think a lot of people really got behind the idea, thought it was a boring paint and furniture company, but he put it out there. It wasn't something popular. And look what it's done. Like there's a YouTuber that's actually performed. So, but you guys all want us to think that Meet Kevin is like some guru because he can put all these courses. He's a gifted salesman, and that's what he is. He's gifted at selling you stuff. Doesn't care what it is. He's just decided he's going to sell you investing topics. So like we'll go into it, but just let's go into the past. Okay. Whether this short idea is going to work or this, I'm not watching this video. So we'll get in the past. Kevin has been first, he's not even that up on Tesla. Let's get that out of there. A lot of his stock. So if you remember, he sold everything at the end of 2021. He sold everything. So he doesn't have any pre-2021 Tesla shares. So if you're going to think he has all those shares, he doesn't. Jeremy at least has those shares. Okay. So what did he do? He said he made up some bullshit about why he panic sold his portfolio. It's because he was going to wait for interest rate, whatever magic. Then magically he's buying stocks like 2 months later when what he prescribed, why he pulled out of the market didn't happen, but he's buying stocks again. So this is the only evidence I have from Strongman's channel because he deleted all his videos. So April 10th, 2022 was when he made a big purchase of Tesla stock, Meet Kevin. after he went to Giga Austin and he got mesmerized by Elon and all the magic of Giga Austin or whatever. So we can look, so so we can look here is about, I think it's, where is it, April? Yeah, so here's where no, it was April 22, I think, right? Let me make sure I got the right April 22. Okay. April 22. So you can see he practically timed the top. So he did an amazing thing here. He panic sold at the bottom, then he bought in when it went up, and then it tanked again. So he failed on like every of this Tesla thing that he did. Total disaster. He sold all his properties at the worst time. So this is when he bought a bunch of Tesla stock after that Giga Austin. That video is on Strongman's channel. That's the proof you can read it or see it. So he's down like 50% on those shares. So he's getting crushed, just crushed on his investing. And now he's going to short the company. Okay, cool. This is the guy we choose to follow online. I can say, like, we can look at the other thing. So if we look at like let's talk about like the Tesla. Tesla people. I think you guys are clowns that push the stock on people. I think you need to separate. There's Tesla, the pre S&P 500 company, and Tesla, the post S&P 500 company. And that's really what you need to focus on. So this is the big auto manufacturer Tesla that joined the S&P 500 December 2020. That's what you're looking at when you buy them today. Okay. I doubt most of you watching this have stock from before that. So if you do, then that's a different topic. If you bought it before that date, you bought a startup that was barely scrapping to exist, almost went bankrupt, and through all the odds made it. And if you bought 100 companies like that, probably 95 of them would have been turds, but you made it and you did well. But that's not the company you're buying today. You're buying a large auto manufacturer that's struggling pretty mightily in a lot of ways, the way I see it. And they always, some of them like, well, you worked in the legacy auto industry, so you're going to be, because I have experience in the car industry. My dad was a car salesman for like 20 years, and they think that doesn't give me any understanding of the car industry. I disagree with you. The car industry is the car industry. You guys tell me that it's all going to change because of Tesla. I see it's all about the same. We still have auto dealerships. Auto dealerships aren't going anywhere. All right. They will change, but they're not just going to disappear off the face of the earth. They're in the laws of a lot of states. That's you have to sell cars that way. Um, and a lot of companies have not taken the same approach to vehicles that Tesla has. And some of them have changed tactics now that we've seen. They were all in on EVs. They've backed off now because they can. And it's not a sign of failure. It's a sign of adapting. These are not electric or gas uh, auto manufacturers. They are automotive companies. They make vehicles that have different engines that get you around. That's how I view them. And I don't know why people get this whole legacy auto term was created by Kathy Wood, first of all. So if you use that term, but then you also tell me that Kathy Wood's a clownish investor, I'm like, I don't know. You're sending weird signals. So, like, which one is it? Because you're taking some of her terminology to use in your defense of Tesla as an investment, but you think she's outlandishly clownish in her price targets. But which one is it? Do you believe her or don't you? Because saying legacy auto is such a stupid thing to say. I mean, all these car companies are very old. That's irrelevant to this discussion. They make vehicles of various engine types. There's actually companies that have made steam freaking cars in the past. All right. Then they made gas cars. Now they make hybrids and EVs, diesel. It's like, okay, they make vehicles that move people around based on customer demand. And a lot of the manufacturers now are pulling back from EV because they follow customer demand needs, the good companies. And they see that now customers want hybrids because they're concerned about, and you can see the surveys, they're concerned about the range of electric vehicles, not Tesla. They're concerned about the range, the reliability of the charging networks. They're concerned about the costs of like insurance, and they are more expensive vehicles. I've been harping on they're more expensive to insure also. So there's major concerns, pulled back demand on EVs. So what did happen? You have like Toyota and Ford and Hyundai can now pivot to hybrid technologies, Stellantis also. and they have hybrid technologies. A lot of them stopped doing hybrids because they thought they were going to go all EV because of the credits, and they thought that's what the demand was going. But it's kind of pivoted now due to different, inflation's a problem, and the certain, where we are right now in the world. So but they can pivot, right? An EV company can't. And you can look today, look, Fisker's probably going bankrupt. I mean, sole EV companies, a lot of them are going to be in real trouble, I think, because they can't pivot. Because like Ford pivoted to EVs, they can pivot to their commercial vehicles to produce cash flow. Toyota's got hybrid technology, and hybrid sales are going amazing right now. So they don't have to push EVs in your throat at this point. They can pivot, so they will if that's where the customers, are. And I think when people get a load of what Toyota's coming with, Toyota is coming out if they can deliver on a 50 mile per gallon Camry that gets like 700 miles a tank, and then the Ram's supposed to come out with a triple electric motored hybrid that's I think the same 700 miles a tank. I mean, these are game changers, I think, and I think that's going to change the equation for a lot of people thinking about what you want to buy. Just imagine, like, you could conceivably get a hybrid, vehicle. You only have to fill up the tank once a month, maybe. Um, so I think that's going to be a different, that's going to bring a different, option for customers that they haven't had, and that's coming out this year. The Camry, I think the Stellantis trucks next year. But but where did these people come up with these outlandish price targets? They said, Tesla's going to make 16 million cars. And then I heard things like $2,000 a share, all sorts of shit. It's like, well, all these people during 21, 22 were doing 10-year 50% CAGR growth on a car company. Like the absurdity of running that number. And they would throw it in their DCF model. Where to God, this is where all these Tesla people assumed that it was the greatest investment in the world. You just assumed it was going to grow 50% for 10 years. And they never really pivoted from that. I don't think. I honestly, they can say all day that they adapted. I don't think so. They still thought it would grow at that rate. So what? Last quarter kind of punched them in the face. I thought 1% car year-on-year growth of car revenue in the fourth quarter. I remember was 1%. That's stunning for something you expected to grow 50% year on year. And I should hope that would have surprised them. I don't know. But you could look, here's ARC's price target for Tesla from 2021. Okay. So like the hoopla of the market. They were okay, 2025. We're almost there, right? It's just around the corner. It's next year. Look at the price targets. I mean, let me zoom in a bit. Sorry. I mean, yeah, expected value $3,000. Okay, I understand they split 3-1 split since this price target. Okay, so you're at $500 if you do the 3-1 reversed. $500 a share. Are you even close to 3,000? Like the bear case. You're not even. You're only a third of the way there right now at $500 a share. So, and this is their bear case. 25% chance of this. So their most obvious case was this one. So we can look at what else they were. Look at this. Expected gross margins. So they expected 40% gross margins on Tesla's automotive, division by 2025. Yeah, let's go look. Where are we right now? I think you all know where it is. Oh, cool. 17. I mean, you got a lot of catching up to do. You like this is looking really bad for you. And I think most of the people that are going to be pissed at me or fight me, they never pivoted from these projections. They never did. They took these projections to heart when they first invested in this thing in 2020, 2021, 2022. And they thought that this was just the way it was going to go and this was an easy win. But life's hard. And the bigger Tesla became, I knew that they would have bigger challenges. When they became a real big, large auto manufacturer, it brought on problems they didn't have to deal with before. And I think they had these problems are going to keep growing. Problems of now, they have a larger fleet every year. There's more Teslas out there. and they're getting older, right? So the magic that they had with their margins in the like during the hype market, which I kind of could see this coming. So you can look at this chart as they get older, right? So every year the fleet, which you just take all the Teslas out there, the average life, they're the youngest cars out there because they're newer than like the GMs and Fords and Toyotas. So the service costs are going to just go crazy because you're going to have to start doing more warranty recalls, more service calls, right? Cars are going to break down as they get older. Look at the growth of the service costs, 31% year on year. Okay. That's growing at 31%. I can go look at revenue. Revenue's only growing at 3%. This is what I thought was going to happen because I worked at a large manufacturer, and it's just part of being a large auto manufacturer in America. You have warranty issues, you have service costs, right? And this is just normal wear and tear of vehicles. And you can't avoid these costs. So, you had this blissful time when they were a young, vibrant, fast growing auto company that didn't have these issues because it was all new sales. So life was, that's not the company you're buying now though. So, and some of them like, um, they want to say, well, they can pivot towards energy storage because they're an energy storage, not just a car business. Okay, fair enough. But I mean, it's just a tiny sliver of their business. Energy and storage, 1.4 billion. Auto was 22. This can grow at, triple the rate of auto. It's just not going to compensate for what's happening with their auto business. Um, so I don't know. Like, I think you people need to you should be scared. I don't think you should have a lot of your money in this company. I mean, I think it could be part of a growth, like an investment like SCHG, like I do, or VUG. There's a sizable portion of it that's Tesla, but it's still like 5 or 6%. Um, if you're more than that, I think you're silly, which I think you need to just think about this as a large manufacturer. I think a lot of the debate, a lot of the things you would fight me on don't apply to the company after it became an SP 500 auto manufacturer. I think you're going to talk about it as the fighting against odds startup, and that's not the company you're buying at this point. Um, and they're doing silly things. Like in my experience in the auto manufacturing industry, people like heads up displays. It's very weird that they took out the heads up display in your car where you're driving and there's a dash, right? And you can see like your speed and your tachometer and your fuel gauge or mileage for electrical. So they took that out of their new car. They took the turn signal stick, which I know people were really annoyed about that. That's every car you've ever driven. People like me had a stick on it, and you use that for your windshield wipers and your turn signal. I don't think it's very well received. Um, I I just I think they're making design decisions that are foolish, that the general public is not going to like, let alone the Cybertruck, which you can imagine my opinions on that. I've said enough, but so here it is. I mean, you got downgrades, you got the Tesla shills who are then going short the company, and he's probably going to blame macro, I'm sure, because he doesn't want to piss off Elon. But this is a large auto manufacturer that has typical problems of a large manufacturer. There's no easy solution. You can't outbuild this. They're fighting. They're doing a price war with Chinese manufacturers, which I think is just stupid as hell. And you're not going to win that. So I don't know what their plan is. Their design decisions are weird with the car. I think their manufacturing is still problematic. I still see videos online of cars with weird paint, and the quality controls are iffy on some of these Teslas still, right? Especially the Cybertruck. So to finish this off, though, so we got to show. Okay, I hate to. I have to show a everything money video because this is the only proof I have. So let me pull it up. Okay, hold on. Where'd it go? Okay. So this is the only proof I have. Again, the original video is gone. So I have to use, so this was a Meet Kevin projection of Tesla, I believe from
Hey everybody, welcome to the show. It's Seth.
May 2021. So we're like, let's reference back to when these people were pushing these fucking stocks on us, right? Not now, but back then. So they covered a Meet Kevin analysis of Tesla stock in 2021 because I don't have the original. So let's go to this point.
% bottom line margin. Keep in mind, they currently only have a 21%.
Okay.
In 2030, they're expecting the ramp.
Okay. I hate to have Paul talk on my channel. This actually was a fair video he did on him. So look at the delivery targets. Like, you got to think about this. So here's the ramp. Like, okay. He was on 2022, but it was in 2023. If we know, like if I look at let me look at the deliveries. 1 second. So in 2022, they delivered 1.3. So that was wrong. Okay. 1.3. So he's wrong. Meet Kevin. 2023, they delivered 1.8. He's getting much. Okay. He's a million cars off on what he projected when he was pushing the stock on you. He's a million cars off. Okay. So what do you think is going to happen? It's going to get more and more obtuse. His projections that he pushed on you when you bought this stock based on Meet Kevin in 2021. So he effed you completely. He's already not even close. Like, he was a year off, and even then he was wrong. So this is what he was pushing on you. I'm trying not to play his little like, look at these silly projections. Like, this is what people believed with Tesla. You think Tesla's going to build 16 million cars by 2030? Like, absurd. Like, this is what they believed. 16 million. It's that number is just astronomical to believe that. I think, yeah. Oh, revenue including FSD. Let me get here.
Go to the more like nuanced theses in
I'll give
just
him
a
that. He
moment
did
and
say
kind of
that.
see what Tesla's projections might be as well. But if we go with a bullish thesis here of 16 million cars by 2030, and the easiest way to assume robotaxi revenue, full self-driving revenue, is, in my opinion, just to lump this into the car's revenue, because otherwise we're making way too many projections over how robotaxis can be monetized and full self-driving.
Just dump it in there. It's inevitable. Just dump in FSD and robotaxi revenue. It's going to happen. It's inevitable. I Meet Kevin. I know what I'm talking about. It's not inevitable. There's huge hurdles you have to face to get this thing over regulators in all 50 states. All 50 states have to, it's not just the Fed. The feds have nothing to do with this. It's 50 states have to agree to allow this individually. They have to scrutinize it. Good luck. All right. You're not even close. All the safety report data that you see online is self-reported by Tesla. It's not been scrutinized. The very few reports I do find from the Highway Transportation Board don't look good for Tesla. The few that they are doing as far as autopilot and FSD. So
I'm going to say $42,000 per vehicle, fully monetizing autonomy. So if it's a $200,000 semi or a $20,000 car that Tesla ends up selling, I think the average selling price is going to be $42,000 in my bullish thesis. This is then simple math. We multiply to get revenues. We have generally around 2.7 to 3% of cars that get leased at Tesla. We get services that are usually around 10%. I'm bumping that to 12% in my bullish thesis here.
Look at the revenue from energy he projected. Look at it. Like, okay. What is this? $134 billion. Oh my God. 134 billion in energy. Okay. Last quarter, 1.4 billion. So we're at, I don't have the number for 2023, the whole year. So if it's 1.4 in the fourth quarter, maybe it's 5. So let's just say 5. So ballpark, $5 billion energy, 2023. In 7 years, it's going to be 134 billion. Like, just wrap your head around how feasible you think that is to blow it up that fast and that big. It's absurd. It's absurd.
here. There's going to be a limitation or a risk factor for batteries, obviously, for this expansion. But my bullish thesis is Tesla.
100 billion revenue from insurance. Come on. Come on. This is crazy. All right. Revenue. Okay. He has service. I have that. So I have to pull the chart down. Damn, it's not cooperating. 1 second. Services, 2.2 billion in the fourth quarter. So let's say that they did 7, okay, I don't know, 7-8 billion for the year last year in service. He's projecting 80 billion in 7 years. Just think about that. How likely is that, you think? That's a huge expansion.
Easily getting to
10%. So why is he doing bullish in one area? $1 trillion valuation. That's almost 100 to 1 PE. That's like 88 PE ratio for a company that would be the largest company in the world.
Isn't their PE already much higher than that?
PE
And
is
it's
Yeah,
out of
but
control.
that doesn't
but
matter.
he's- yeah.
Go find me stable, huge companies that have no that.
15
Seth, I
million
really
right
hate
here.
this.
See, we
I
start
know this is bullish case. Somebody say it's just bullish case. No, this is
That look at that crazy deliveries chart. Like just never-ending growth, no problems, just slap a freaking percentage on it. Do it for 10 years. This is what these people do with these discounted cash flow models. Everyone loves to make them and put them on YouTube because it's easy to present. It's so easy to just make one of these spreadsheets and then put it on there and show you, and then you feel comfortable investing in this company and you wrap yourself in a blanket. Investing's hard though. So and this is where we got this. All his numbers so far, like not even close. So, and if people bought on this, then you're not doing too well. But
20 at $700. If this is true, every
like projecting a car company at a PE ratio of 100, like what the hell? Are you kidding me? The average PE ratio, I think, of a car company is like single digit, like like Ford PE. It's probably like 8 to 12 for like Toyota GM. Like, and you're assuming 100. Oh my god, like this is nuts. So that's the most I can stand to Paul. Not for. So I guess final thoughts. I got to get off soon. I just think that I don't know, like I think you drank the Kool-Aid if you believe in, first of all, like I don't know how, if you're a Tesla fan, you don't think it's weird. They went from robo-taxi, FSD, push, and then they just pivoted overnight to pushing robotics on you, Optimus. And then all of a sudden they pivot and Elon starts throwing AI down your throat. And this all happened within maybe a year and a half, that he's just throwing darts at a board. And I don't know how you can't see what he's doing. He's just trying to give you like hopium constantly of things that don't make any revenue, and have never been done before. But then you're going to price, how do you even model something that doesn't exist? There is no robotics revenue for these Optimus bots. There is no revenue for FSD or robo taxis. They don't have AI that does anything. So like, how are you modeling this? First of all, you have to model the chance of it even happening before you even can figure out if it even is going to produce revenue for the company. This is extremely difficult. I'd rather go buy a kitchen cabinet company. I think it's much easier use of my time. Like, you guys are just making investing so hard when you buy something like Tesla at this point. I mean, I looked into this. I assessed this company. I have video proof. I bought it. I think it was about here. I think my video was like end of January. I bought it about here at 14. I understood what their challenges were, and now it's 18. The hardest part was finding the right housing company to buy. It took me a few weeks to narrow my search. That was the hard part. But once I got a grasp of this, it wasn't that difficult. And I don't have to project robotics and AI. And I think you're just making this unnecessarily hard, trying to figure out, wrapping your brain around something like Elon and Tesla. And you're still, even today, this is still an expensive car company. It's a car company. They've not proven themselves to be anything but a car company. Now they have the challenges of a aging, growing fleet that requires servicing and warranty recalls, and they have issues with their suspensions they have to deal with. They're releasing new prototypes they think they can mass produce, like the Cybertruck. He's talking about crazy crap with this Roadster. Like, why are you spending capex on a Roadster? I mean, you're not going to be able to sell a lot of these Roadsters. That's just not a high volume car in America or in the world. These little small Roadsters, they don't sell that well. It just seems like a waste of time. Should focus. Their designs are very aged now. Like, I saw the refresh of the Tesla 3. It wasn't very much. Like, they're not refreshing their vehicles. Hyundai is on. I tell you, Hyundai, they're crushing it right now with their designs. I saw one at the dealership, so I think they're doing pretty well. And then Rivian, if Rivian can survive, their designs are very innovative, I think. So the landscape is tough right now for these companies, especially high interest rate. People aren't willing to spend a lot of money on cars like this. So anyways, let's see. I got to get off soon. I think we're starting. I don't know. If you want to believe someone like Kevin, like, his track record is just terrible. Like, his track record just garbage on investing. He's always mistiming stuff. But I guess he looks better than me, so maybe you can trust him. And he knows how to smile, and his presentation, maybe he'll show you that screen where he stands behind it and writes backwards, and that blows you away that he can do that. So obviously he's a good investor because he can write backwards. You just believe him. It wows you. Right. And he can smile and he can sob and he knows when to get emotional, and you believe it. So, and then here you are buying Tesla at the wrong times when you probably shouldn't be that heavily allocated in something like this. So, anyways, oh, you're a hater. I am sometimes, not always. I can tell you though, who's doing really well? People want to call this a legacy company, but Toyota is right. And they've been right. Toyota was right. They said they weren't gonna devote themselves to electric. You can go look at their statements. They've put out their opinion on automotive industry. They have a report. You can download it. I think it was from 2022, where they thought that maybe electric vehicles could be like 30% of their total manufacturing, maybe someday. But they believe they would still involve different technologies for different customers. They always viewed it that way. And I think they're right. And the stock price shows it because it's vastly outperformed Tesla. So they are crushing their strategy. And I think they're going to keep doing well. So if you call them legacy automotive, you sound like an idiot. All right. That term, I know who you are as an investor if you say legacy auto. It just shows. So I'm going to get ready for the next live stream. All right. Is the greatest Tesla shell of all time. There's so many of them. There's just so many of them. They latched on to Tesla and they've made good money for themselves, promoting Tesla and Tesla viewing clubs, solving the money problem. I don't know, like they all just flourish in this environment. And when Tesla struggles and like the actual risks and problems have shown, they can't handle the heat. And there's now Twitter people that are attacking back, which I follow. I'm not. It's not like I'm the only one that sees what's going on here. I'm trying not to attack Elon himself. This is about Tesla. There's problems, and I see them. Someone that worked in the car industry for a bit, and there's no easy solutions to like the problems they're going to have. So we'll see. I mean, if interest rates start going down really fast, that would be good for them. But I don't see the Fed is probably going to just hold fast for now. So we'll see. But anyways, yeah, tune in Jesse's. I think we're starting a bit. Thanks for watching, and I'm working on a topic, not just a live stream. I'm trying to do a topic next. I feel better now. I was sick for a few days. Like portfolio diversification. I have a few. I'm going to do a video on it probably about like, what does it actually mean to have a diversified portfolio? Like, what does the research actually say? Is there any merit to, does it matter if you hold 5 or 50? Does it matter? So I'm trying to put that together as a topic because it's kind of something came up. It'd be interesting. I'd like to do a video too about the difference between growth or value and quality. I think that's a cool topic that nobody talks about. And I think a lot of people bleed those two concepts together. They think they're talking about value, but they're really talking about a quality investment. So I have a few ideas. It's just a matter of not getting sick again, having fucking time. So thanks for watching, and we will see you later. All right. Let's play Meet Kevin Ouch, or you got to play this one. All right. Thanks for watching.
The point is, to me, real estate's freaking easy because I look at this stuff and I go, I know what to do. Stocks, I don't know. So don't ever expect Meet Kevin to sell you a stock investing